More than just business news, we're news for business people.
Good morning. You're watching All You Need to Know on BloombergQuint. I'm Darshan Mehta. The Asian markets at this point of time are trading with a positive bias. Hong Kong as well as Japan are trading with gains of close to 1%. Our markets are seeing a gap up opening of almost 33 points. So it seems to be getting better from the last half an hour. So there seems to be traction. But the ADRs ended with a negative bias. HDFC and ICICI Bank were down over 1.5% in trade. In fact, all the ADRs ended with a negative bias. The only exception was Wipro, which was pretty much muted in trade, but there was a negative bias. Crude was down over 2% in trade yesterday, has managed to recover in morning trade, but still Brent crude is below the $65 barrel per mark, and WTI is trading below the $61.50 barrel per mark. Heavy losses coming in on the base metals on the LME. You could see aluminium was down over 2%. You could see zinc was down over 1%, and lead was down over 2.5%. Even if you're looking at what's happening in China currently, steel is down over 1.6%, aluminium is down over 1%, zinc is down 0.5%. So overall, the trade setup on the commodity side does not look very good at this point of time. Precious metals are trading with a positive bias in trade currently. FIs were net sellers yesterday. In the cash market, they sold in almost 718 crores. DIs were net buyers to the tune of 409 crores. Overall, the Nifty saw selling, the Bank Nifty saw selling. The mid caps and small caps saw much more selling than what we saw as far as the Nifty is concerned. FMCG seems to be the only sector that managed to hold on in trade, but PSU banks and pharma, again, selling was seen on these counters. The VIX came off a little in trade yesterday. Apart from it, if you're looking at the Nifty itself, the Nifty was down almost 95 points. What contributed? Again, Reliance, ICICI, SBFC as well as SBI. All these counters causing major problems to the Nifty. The only exception on the gaining side was ITC, which lent some support, but overall it was an extremely weak day of trade. Now, if you're looking at what happened with the F&O side, basically there was long unwinding seen both on the Nifty as well as Bank Nifty. So this is the Nifty, which was down almost close to 1%. The Bank Nifty was down 1.3% as the open interest build-up saw shedding of in open interest. Now, in terms of where positions are taken, so it seems that 10,200 seems to be the support level that the market is looking at this point of time. Overall, the bears are active from levels of 10,300 to 10,700. They are writing in from those levels, indicating that they want the market to come up, and the bulls are finding support from levels of 10,200 right up to levels of 10,000. So it'll be very interesting to see how this 10,200 manages to pan out in trade. Where were positions taken yesterday? Since the market fell aggressively at 10,300 to 200, you can see this big green line. That are the call writers. They're writing in and they expect the markets to go below the 10,200 mark in trade. So if it falls again below the 10,200 mark in trade, put writers will have to shed positions in open interest. Now, PCR also came down significantly as call writers were much more aggressive than the put writers, both on the Nifty and the Bank Nifty side. There is just one counter in the F&O band that has come out, but overall, Dewan Housing, HDI remain in the F&O band. There is OBC and IDBI which remain in the F&O band, and after a long time, Fortis seems to be coming out of the F&O band, which is down 8% in trade yesterday. Individually, some of the stocks in focus: Adani Enterprises saw fresh shorts. Open interest build-up was almost 16%. You had counters like Torrent Pharma because of acquisition news which wasn't taken properly. Open interest build up of 15% on the short side. Again, you had counters like Voltas which saw fresh buying that came into the counter. You had ICICI Bank which saw fresh shorts on issues of this entire SFIO probe that is coming in, and Fortis comes out of the F&O band, but yesterday there was long unwinding that was seen, and finally Karnataka Bank and Kotak Bank were in focus. Kotak Bank actually saw fresh buying that came in. So these are the counters that you need to watch in trade today.
Stock of the day is Grasim Industries. A foreign brokerage, JPMorgan, has hiked the target price for the counter while maintaining the overweight rating for Grasim Industries, indicating a potential upside of nearly 30% from the current market price. The target price has been revised to 1,450 per share as compared to nearly 1,375 per share that we've seen earlier. Having said that, the company is now trading, the brokerage says that Grasim at this given point of time offers an attractive risk reward at current level, and it trades at a 52% discount as compared to its holding company, the discount being at its all-time high level. And it's also said that the discount is despite the strong operating performance reported by the company and receding capital allocation concerns. Also points out that the standalone business of the company, that is VSF and caustic soda business, has been doing extremely well, and it expects to deliver on a consistent basis. Also, it says about the large capex plan of the company being at 6,500 crore earmark for a span of nearly 3 years is positive, given that the company continues its focus to invest in high ROCE related businesses. And Idea's recent capital plan raising separately also allays concern that Grasim Industries is now only investing in meaningful investments. Talking about the consensus rating, overall Bloomberg consensus rating, out of 15 analysts which track the counter, you would see 10 analysts have a buy rating on this counter. 4 of them have a hold, while only 1 of them suggests a sell. In terms of the potential upside for this counter as per Bloomberg consensus, that indicates an upside of 20%, with the most bullish target coming in from IIFL at a price of around 1,474 per share, followed by JPMorgan. With that, let's toss it over to Saloni and Jayesh for bond and commodity market updates.
Thanks for that, Nikki. Let me start off with oil prices, which are currently trading mildly positive in Asian hours. But this is on the back of a more than 2% fall, or over a 3-week fall that we saw overnight. So WTI slipped as much as 2%. On the back of government data, which showed a jump in crude inventory and the production levels. So the crude oil inventory came up 2.4 million barrels for last week, while the oil production was at a record high. So that was a negative for oil prices. Moving on to the base metal space, the LME base metal index resumed its decline after posting a gain of about 0.8% the day before. Now, as far as brokerages on commodities are concerned, UBS sees that commodities risk could be there if the deep trade war actually breaks out. As far as individual base metals are concerned, aluminium and lead closed down more than 2% each. Those are the top 2 losers in trade, while zinc declined more than 1% in trade. Copper, nickel and tin, the other base metals on London Metal Exchange, closed marginally lower. Now you can see similar action from the Shanghai Futures Exchange, where steel and aluminium are trading 1% lower. As far as precious metals are concerned, some bit of stability has come about for gold prices near the 1325 mark, on account of the dollar index also stabilizing at about 89 or just above that level. But staying with the dollar index, let's shift focus to the currency space. Morning, Saloni. What cues are you picking up from the currency market?
Good morning, Jayesh. So the rupee strengthened for the 4th straight day yesterday, and it ended by a gain of 7 paise to end at a fresh one-week high of 64.89 levels against the dollar. Now the home currency gained on the back of weaker dollar overseas, along with highly bullish macroeconomic data. Now remember, the Indian unit has gained approximately 28 paise in the last 3 trading sessions after falling to a 3-week low last week. Well, moving on to the debt market, sovereign bonds yesterday gained the most in nearly 2 months after Bloomberg reported that government has made a request for a rating upgrade to Fitch officials, and we have seen yields dropping by nearly 10 basis points to 7.68%, its biggest daily drop since 17th Jan 2018. Now in terms of flows, global funds reduced their rupee debt holdings in the tune of 120 crore according to NSDL data yesterday. Well, speaking of the global on the global market currencies, dollar index ended steady near 89.60 levels. Well, on the other hand, euro gained near 2-week high ahead of the ECB policy meet, which is scheduled today. And lastly, speaking of dollar rupee, it is trading flat in the non-deliverable forward market, which indicates a flat opening for Indian rupee in today's trade.
Amongst the stocks that we're tracking in trade today is HDFC, which will sell its 5.1% stake in CAMS for a cash consideration of 169 crores. Even after this stake sale, they will continue to hold about 5.99% stake in the company. So that's HDFC that we're tracking. That apart, we're also watching out for United Breweries. Now, this is on the back of an ET report which says that Heineken is looking to buy United Breweries shares of Vijay Mallya, which was seized by the Enforcement Directorate, and this shares buying will take up Heineken's stake from the current 44% to about 58.2%. So watch out for that name. We're also watching out for Pidilite, which has entered into a partnership with the German company for exclusive distribution and sales of its adhesives in India and some of the neighboring countries. Torrent Power is yet another one which is on the list. They have emerged as a bidder under reverse e-auction to set up a 124 megawatt project in Maharashtra. That apart, another stock that we should watch out for is Gayatri Projects, where the company's QIP opened yesterday and the floor price was set at 211.65, which is a good 3 to 4% premium to yesterday's closing price. So you could see some positive reaction there. And lastly, you have Stride Sassoon, which said they will launch ranitidine OTC tablets in the US market, where the estimated size of the market is said to be close to $200 million. So those are the stocks you need to track.
Okay, telecom stocks will be in focus, especially Idea Cellular. So there was some issue, that was some news that came out as far as the spectrum is concerned. So the cabinet, what it said yesterday, they give them 2 lifelines. The first thing that came out of the cabinet meet was that, the extended spectrum payment period has been increased from 10 years to 16 years, which is positive for some of the companies. And the second bit of information was a relaxation of spectrum holding cap. So this is what has come out. We'll discuss them in detail. Now the first one, initially what happened was the fact that 50% of the amount when they got the spectrum had to be paid upfront. Then there was this 2-year moratorium, and the balance 50% was to be paid over the next 10 years. Now this has been changed from 10 years to 16 years. So that means, an additional 6 years is something that they're getting. Now, how will this help some of these telecom companies? They will help them to increase their cash flow and help them to manage the capex. Basically, this will help them repair their balance sheet significantly, reduce liability burden. The second part was in terms of relaxing spectrum cap. So initially what was there was that, the current status is overall cap was 25% and 50% was on the back of bandwise cap. What they've done is that they have increased the limit from 25% to 35% on the overall cap, and from a bandwise cap they've moved toward combined cap, which is positive for companies like Idea Cellular, which have excess spectrum to them. Because what happened was, if they had excess spectrum as per the old rules, they would either have to find a buyer for it, or they would have to actually go ahead and sell it to the government. Now Idea Vodafone has significant amount of excess spectrum, especially in states like Maharashtra, in which there's 3.9 of the 900 megawatts and almost 10 of the 2500 megawatts. So Idea definitely benefits significantly from this move. It will help the incumbents more than Reliance Jio, what the move that came out from the telecoms ministry, from the telecom cabinet yesterday.
The Competition Commission of India has imposed penalties on 3 airline companies for anti-competitive behavior. The CCR today imposed fines of 39 crore rupees on Jet Airways, 9 crore rupee on Interglobe, which runs Indigo, and 5 crore rupee on SpiceJet. This fine is around 3% of the company's average turnover from air cargo transport services for the last 3 financial years. The competition watchdog found that these airlines were guilty of entering into anti-competitive agreement regarding fixing and revising of fuel surcharge. Now, fuel surcharge is a component of the freight charges. CCI condemned these airlines for using fuel surcharge as a pricing tool, since it was essentially introduced to mitigate the fuel price volatility. CCI has condemned and initiated this action on receiving a complaint from Express Industry Council of India against Jet Airways, Interglobe Aviation, SpiceJet, Air India and Go Air.
We are very committed to acquiring this asset. So that's one statement I think that we can make. And with respect to the eligibility, we have the resolution professionals who will determine that. There's a committee of creditors, and then there are the courts. There are several levels of discussion that can take place. So we will hopefully be, our view is that we are eligible now. So we are not looking forward to any court battles, because our eligibility at this point in time, from our standpoint, is clear. We think that the Section 29A is intended to keep out willful defaulters, which ArcelorMittal certainly is not. The spirit of that law is pretty clear. So Whether there will be a court battle or not is another matter of speculation. But at this point in time, I think our focus is on our eligibility, which we think is clear, acquiring the asset and then moving it forward to achieve its full potential in the Indian economy.
All right, I'm not sitting here to judge whether you are eligible or New Metal is eligible. I'm just simply asking that the chances right now are fairly high that this will end up in court, and therefore how prepared you are for that battle. But I think I've got your answer there. The question with regards to the financial bid, now there are some rumored numbers out there. It is expected to be that the plant or the business of SR Steel is valued at about $6 billion. What can you share with us? Again, I suspect your answer is going to be that's confidential, but nonetheless, I should put the question to you.
Yeah, probably that's the most confidential of all things in the bid.
All right, but $6 billion valuation, a ballpark is correct for the business?
Well, I think each bidder has probably done their own valuation and understands what they can do with the asset and made their bid accordingly. So that's all I can say at this point.
Let's decode the delivery data as of yesterday and the stocks that you need to keep on your radar based on that. The first stock that you should have on your list is ICICI Bank. Now, yesterday it fell more than 2.5% and saw delivery selling of nearly 500 crores. The delivery volume was up 75% at nearly 1.7 crore shares as compared to its 5-day average, and the total volume surged about 50% at more than 3 crore shares as compared to its 5-day average. The second stock that you should watch out for would be SBI. Now, that was down about 4% in trade and saw delivery selling of more than 300 crores. The delivery volume actually surged 50% at about 1.3 crore shares as compared to its 5-day average, and the total volume was up about 28% at nearly 3.5 crore shares as compared to its 5-day average. The last and final stock to watch out for would be L&T Finance. Now, yesterday it fell about 1.2% and saw delivery selling of more than 55 crores. The delivery volume, however, more than doubled at about 36 lakh shares as compared to its 5-day average, and the total volume was up nearly 64% at nearly 64 lakh shares as compared to its 5-day average.
Well, speaking of brokerages, first up we have Motilal Oswal on Aegis Logistics. Now they initiate buy on the stock with a target price of 303 rupees, which suggests a potential upside of more than 30%. Now, Aegis Logistics is India's leading oil, gas and chemical logistics company, and they believe that Aegis will benefit on the back of rising LPG consumption and import demand in India. Elsewhere, increased output in Haldia and Pipavav terminals will drive the throughput for the company, and they expect LPG throughput, EBITDA as well as EPS to grow at more than 40% CAGR each over FY17 through FY20. Now, Motilal Oswal believes that major capital expenditure has been executed by the company, and they expect Aegis to generate strong free cash flows going ahead. And a key thing to watch out for Aegis, according to the note, is that they expect management to come up with a new terminal plan in the coming days, and their bull case target price for the company stands around 342 rupees, which suggests a potential upside of more than 50%. Now, secondly, on brokerages, we have Angel Broking on Ashok Leyland. They initiate buy with a target price of 163 rupees, which suggests a potential upside of more than 15%. Now, Ashok Leyland is a flagship company of the Hinduja Group and one of the largest commercial vehicle manufacturers in India. Also, the government has recently announced scrappage policy for commercial vehicles older than 15 years of age, and they believe that this development will largely benefit the company and will trigger a near-term growth for the company as well. Ashok Leyland is set to capture additional growth opportunity on the back of improved rural demand post GST disruption, and a boost in e-commerce demand will drive the growth in the near term. And Angel Broking expects the company to launch a new product every 6 months, and they expect net profit CAGR to grow at 19% over FY17 through FY20 due to improvement in the replacement demand by the company.
Let's look at some of the other headlines in focus. Yesterday, the Telugu Desam party led by Andhra Pradesh Chief Minister Chandrababu Naidu decided to pull out of the NDA government at the centre and asked 2 of its ministers in the Modi government to tender their resignation. The TDP has, however, kept the door open for ties with the BJP. It all comes down to the demand for special status that was raised after the erstwhile Andhra Pradesh was bifurcated. The centre announced a special package in 2016 for the state, but the TDP government says no funds have been released under the package. This has turned the focus back on special category status for the state. In response, Finance Minister Arun Jaitley has said the centre stands committed to the monetary equivalent of special status for Andhra Pradesh, but will not give the special status itself because of limitations imposed by the 14th Finance Commission. There's lots to talk about over the course of the day, and you'll find all the live market action on BloombergQuint. There are also a few stories that you should consider reading on the website BloombergQuint.com. Here they are. The SEBI has returned the National Stock Exchange's consent plea seeking to settle a probe into alleged preferential treatment to high-frequency traders, according to 3 people aware of the development. The regulator asked them to file the consent plea afresh once SEBI completes the probe against brokers allegedly involved in the co-location case. The GST Council is likely to consider levying an 18% tax on extra neutral alcohol, that is alcohol used in making alcoholic beverages, at its next meeting scheduled on March 10th. Now let's listen in to Ruchit Jain of Angel Broking on the road ahead for the Nifty.
Certainly the trend for the market continues to remain negative. Yes, just as you said, the whole world's eye on the 200-day moving averages. So we may see some sort of pullback move from this average, but one should not forget that the trend is on the negative side. So rather than playing for that pullback move, any kind of up move, use that as a shorting opportunity on the higher side. So I won't recommend to buy anything because of this support, but rather use any kind of pullback moves from this support as a shorting opportunity.